Let's talk to Ricardo Evangelista. I think I've got that right again, from ActivTrades. Very good morning to you, Ricardo.
Good morning, Nick.
Okay, let's talk about the US. Janet Yellen goes off into the sunset. In terms of her tenure, did she do a good job?
Well, she had to steer the ship through very choppy seas. I would say that overall, the impression that I get from most of the market operators, observers, commentators is that she did a reasonably good job. It's difficult to say exactly what goes on behind the curtains, but the general impression is that she managed to keep at least an air of calm and steadiness during troubled times. I think that the end of a commission coincides also with what clearly is, according to most analysts, the end of the tougher times. I mean, it's fair to say that we are riding an economic cycle on the up globally, in the US especially. According to the echoes that transpired from yesterday's meeting, it's quite likely that we will be seeing more interest rates increases in the near term, even probably in March already. We'll see a new one, and we'll see how the new man in charge, Jerome Powell, handles this, because there's talk of currency wars as well, with euro. I mean, last week we have Steve Mnuchin, the US Treasury Secretary, saying that it could be beneficial for the US to have a strong dollar in order to align their monetary policy with the populist agenda that's got President Trump into power, of a protectionism, imports less, produce more, and a weak dollar obviously would play well into this philosophy. So it will be interesting to see how it all unfolds, and definitely I think Jerome Powell picked up a steadier ship than the one that was waiting for Janet Yellen when she first took over.
And in terms of the markets, is there anything obvious at the moment, or is it still very, very complex?
It's still very, very complex. We saw in the immediate aftermath of the announcement that concluded the meeting yesterday of the FOMC, that the dollar pulled through against all other major currencies. However, this rally was short-lived. There's still some worries regarding that political bias towards a weaker dollar, which obviously can be a deterrent in terms of generating appetite on dollar-backed assets. Investors will listen to that, to those statements, and think, oh, I need to watch myself here. Yes, so we see that against the euro, all the gains were short-lived, so the pair dropped briefly below 124. It is now back above 124. We can say that it maintained the range, but there was a rally of the dollar followed by a correction. I would say that things haven't changed that much in terms of outlook. We'll see what happens after this Friday's non-farm payrolls meeting. Announcement of the figures, and then that maybe further illuminate and give more clarity to the situation, whether or not we're going to have an interest rate rise as early as March. But we'll see what happens.
On that note, Ricardo, thank you very much indeed.